Hi everyone. We're going to begin Unit 3 with Chapter 9, completing the accounting cycle. The first step that must be carried out in completing the accounting cycle is the adjustment process. This video will show you how to make adjustments for accounts that need to be updated. The adjusting process. What the adjusting process is essentially bringing the account data up to date at statement time. It's also known as making adjustments. What this means is during the fiscal period, accounts will become outdated or they will not be updated regularly. And towards the end of the accounting cycle, they must be updated in order to show accurate information in our financial statements. Accounting entries are produced through the adjusting process, and they're called adjusting entries. This video is going to show you how to make adjusting entries. There are three accounts that have adjusting entries. The first one is supplies, prepaid expenses is the second one, and the third one is late arriving purchase invoices. These three accounts must be adjusted. What this means is during the fiscal period, these accounts are not regularly updated, and towards the end of the fiscal period, they must be updated in order to show accurate financial information. So we're going to take a look at supplies first. We must make adjusting entries for supplies, so we must update the supplies account at the end of the fiscal period. When supplies are purchased, their cost is debited to the supplies account. So every time we purchase supplies, our assets are increasing through the supplies account, and we're going to write that figure on the debit side. However, what happens is supplies are used regularly, they're used on a daily basis, and no accounting entries are made to record that usage. So say for example, in your company, your employees are using papers, pens, markers, highlighter, post-it notes on a daily basis. No one is accounting for all the supplies that are being used during the fiscal period. However, in order to show and record accurate financial information, the usage of these supplies must be shown. So during the accounting period, the balance of the supplies account represents the balance at the beginning of the fiscal period plus any new supplies purchased. And then towards the end of the fiscal period, we must account for the used supplies. We must figure out what's being used and how much supplies have been used during the fiscal period. In order to do that, we're going to be introduced to a new account. It's called the Supplies Expense account. This account represents the total amount of supplies used, damaged, or stolen during the fiscal period. The balance of the supplies accounts is zero throughout the fiscal period. This is because no one is accounting for the supplies that are being used, damaged, or stolen. However, towards the end of the fiscal period is when we start to use this account. To book the adjusting entry, the first thing that must be done is to determine how much supplies inventory is remaining. So this means that all of these supplies that are remaining must be accounted for. So all the markers, all the pens, all the papers, all that stuff must be accounted for, and we must determine what we have remaining from the supplies that we purchased at the beginning of the fiscal period. Once we've determined what we have, we then must determine the cost of the supplies used. So the difference between the inventory count and the balance of the supplies account. So we must see what's been used throughout the fiscal period. This is what recording that entry will look like. So assuming that supplies on hand at December 31st were $1,386, so the supplies inventory, we must figure out what the usage was. So we began this fiscal period with $7,900 worth of supplies. What happened was we used a whole bunch of supplies, and now, after counting what's in our supply cabinet, we have $1,386 worth of supplies remaining. So the difference between the two is $6,514. We have used $6,514 worth of supplies. Now, because that decreases our supplies account, it decreases our assets because we've actually used this much supplies, we're going to record that in the credit side in our ledger account. Now, because that increases our supplies expense, we're going to write that on the debit side for our supplies expense account. When recording that in the general journal, it's going to look like so. Our supplies expense is going to be debited by $6,514 because that's the amount of supplies that were used throughout the fiscal period. And our supplies account, our asset account, is going to be credited for the same amount because that's how much our supplies, our assets are decreasing because this is how much supplies we actually used throughout the fiscal period. and now we have remaining is the $1,386 worth of supply. When we write a little explanation, the only thing that needs to be written is adjusting entry to record supplies used in business, as our little blurb to define what has happened. The next thing that must be done is we must write the difference underneath. So we're going to subtract, so the remaining amount is going to be recorded, and it's going to be circled. We're going to subtract the right side from the left side. We're going to write our amount underneath on the debit side, and we're going to circle it like normal. Same with the supplies expense, because this is the only thing here. The 6,000 figure is our final remaining amount. The second type of account that needs to be adjusted is a prepaid expense account. There are expenses that are paid for in advance. This is not an issue if the expense falls within the fiscal period. However, there are some expenses that will fall within multiple fiscal periods. It will be the full year. These expenses need to be accounted for. If the expense item affects more than one fiscal period, it must be treated as a prepaid expense. A prepaid expense is an item paid for in advance, but one where the benefits extend to the future. So you pay for this expense at one point in the year, and then you use it throughout the year. Insurance is the most common type of prepaid expense. A business can purchase insurance to cover possible losses on automobiles, buildings, content, crops. When you purchase insurance, you usually pay for 1 year's coverage in advance. Occasionally the period can be greater than a year, and so you need to account for the usage that is being done. You need to account for the insurance that you're using throughout the year. When prepaid expenses are purchased, they're usually debited to the prepaid expense account because they're increasing our expenses. Prepaid expense accounts have values, therefore they're classified as assets. This is a little tricky account. Even though it's an expense account, because this expense has value, it is technically considered an asset. If you're to cancel an insurance policy, a portion or all of the prepaid insurance expense will be refunded to the insurance company or broker. So this means that if you were to cancel it, there's money being exchanged, so it actually has value. Here's how you would do a journal entry for prepaid expenses, or a ledger entry for prepaid expenses. We originally purchased insurance for $1,800 September 1st, 2007. It is now December 31st, so 4 months has gone by. This is what it will look like when we calculate it in our general journal. So our insurance expense is going to be increasing by $600, and our prepaid insurance is going to be credited by $600. This is because we're going to take the full value, the $1,800 that we originally purchased, and we're going to divide it by 12 for each year. So if I were to do this, if I were to take the $1,800 and divide this by 12, this means that for every month I'm paying $150 worth of insurance. From September to December, that's 4 months that has gone by for which I have been using the insurance. So I'm going to multiply this number by 4. So the amount of insurance that I've used during this fiscal period is $600. So I'm going to write $600 on the credit side of my prepaid insurance account, because this is how much I'm actually using. The value of my insurance is decreasing by $600. And if you take a look at the insurance expense account, I'm going to record $600 on the debit side because my insurance expense is increasing by the amount that I'm actually using, which is $600. Now the final step, when we update our accounts, you're going to subtract the $600 from the $1,800 that we originally started with, giving us $1,200. Now this $1,200 is how much this account is worth. This means this is how much money we have in this account. $600 is the final value for the insurance expense because that's how much we've actually spent this year. And that is how you do your accounting for your prepaid insurance. The last adjusting entry that needs to be made is for late arriving purchase invoices. Goods and services are often bought and received towards the end of an accounting period or fiscal period. The invoices for these items may not arrive until the next fiscal period. However, according to the matching principle, expenses are to be recognized in the same period as the revenue that they help earn. What all of this means is that Items are going to continuously be purchased, and the invoices for them could arrive at a later date when the next fiscal period has started. However, because of the matching principle, they must be accounted for. These late arriving invoices must be accounted for in the same fiscal period for the revenue which they helped earn. This means that we must account for the late arriving purchase invoices, and we must adjust our entries for that as well. Here's an example of a late arriving purchase invoice. So prior to financial statement preparation, the accountant discovers that there are two late arriving invoices. We got a telephone bill for $212 and a utilities bill for $315 late, which means after the fiscal period has already ended. In order to do the accounting for this, we must record this in the general journal. We must record our telephone expense at $212. We're going to debit this account because our expenses are increasing. We must record our utilities expense at $315. Again, we must debit this account as well because our expenses are increasing. And we must credit our accounts payable for $527. This is the total value of the telephone expense and the utilities expense added together. So 212 plus 315 gives us 527. We're going to be paying this 527 at a later date. Hence, we must put into the accounts payable and we must credit it because our accounts payable is increasing. As for the explanation, we are just going to write a little blurb that says, adjusting entry to record late arriving invoices. So at a later date, we will pay this 527 for these expenses that we incurred during the current fiscal period. And that is the easy step, or the easy process of accounting for these adjusting entries for late arriving purchase invoices. This is the only thing that needs to be done. You just record them as normal. Tomorrow in class, we're going to do a review of this video. We'll do some group work and we'll practice working with the adjusting entries. And then next class, or the class after that, we'll take a look at adjusting entries and how they're recorded onto the worksheet.